Hi, this is Rob at Edge Stocks. Thank you for joining me. I would like to take a moment and go over some stats on performance that we have to date since we started the Edge Stocks program back on March 1st. A lot of these trades have closed out now, and we have actually over 120 trades that have closed out. I'm here viewing the Edge Stocks history page. Now, we have recently put up these stats right here, and I actually run my own spreadsheet on these and had updated these to make them current today after returning from vacation. And what I'd like to talk about is how the Edge Stocks approach is used as a money management technique and how you can use it in your personal trading. One of the questions some people have asked is, why do we put out so many stocks? And the reason is we're trying to make available a wide array of choices for you to choose from. Some of the stocks might be as low as, say, $2, I think, or could go as high as several $100s. And we don't filter on these, so you could, because we put it out this way, it makes it flexible for you to use. You could, trade stocks in various price ranges, or you could decide to trade stocks that have higher volume, these sorts of things. We don't filter on those, and the reason that we do that is so you can custom utilize the service to meet your own personal needs. Now, if you don't have the money to trade all the stocks, let's say you wanted to trade a fairly large portfolio, you might select, by looking here, the average trade is 19 days in length, and you could decide to allocate your capital according to that trade length to try to keep as much of the money invested as you could. Personally, I don't take all the trades. I select ones that I like how they appear technically. Of course, there is another approach altogether. I was talking with a hedge fund earlier today, and I told them, look, you guys have your means of selecting stocks, but what is really wonderful about the Edge Stocks approach is that you can use it to decide what you are not going to trade. And what I mean by that is, let's say you have a list of stocks that you might want to buy for your portfolio. You check on Edge Stocks and see if it has trades going against the stocks that you're intending to buy. That's not a service that you could, as an Edge Stocks user, do right now, because we don't do it that way. But if we were going to work with you on a custom basis, we might have some kind of an arrangement like that. Now, let's take a look at these stats for a moment, because what I think a lot of people don't really realize is just how powerful of a system this really is. Because if I had developed this as a commodity trading system, what Edge Stocks has done so far is by far the most successful trading system that I have ever developed. Since inception on over 120 trades, it's had 76.5% winners. And the average loss has been a hair over 2%, and the average win has been pretty close to 6%, almost a 3 to 1, actually a 2.72 to 1 ratio between the winners and the losers. There has been one stock that had a maximum drawdown of 6.16%, and that particular trade would have been on one stock. Now, if you were trading in a portfolio of, say, 10 stocks that you were rolling out over a 20-day period, the probability is that you would have incurred no drawdown whatsoever, because the other stocks would have been winning at the same time. But if you had, what I did this number to reflect is, if you were able to magically pick the very worst trade, the worst drawdown that you would have had is 6%. And the profit factor of 9.16 to 1. What this number means is, for every dollar that you lose, you make 9. And so this is currently annualized to a 77% profit with no leveraging. And of course, if you're not experiencing any drawdown to speak of, you could leverage that very heavily and increase that number by a substantial margin by using options, which I do encourage people to do. And if you are doing options, I strongly recommend that you trade options that are slightly in the money or are in the money. Do not try to hit home runs because very often you can lose your whole investment in an option even when the trade went your way if it only makes a small amount. So I strongly recommend doing options that are in the money, which stacks things in your favor. Now on this lower level, and I don't think we have this on the website, I'm also doing medians. And the reason I like to do medians is because it shows me what the distributions look like. And it tells me if they're skewed. Now, of course, any good system relies on having a skewed average trade on the win side, and that is what you see here. The average loss and the median loss are about the same. Now, what this means is that if it was on a bell curve distribution, it would very likely be a smooth, even distribution on the losses. On the win side, what you would tend to see is something skewed a little bit to the right of the curve because the average is a little bit bigger than the median. This I would expect. The median trade is about 2.7% on average, or rather median, but where the average is 4%, about 1.5% higher. The median win to median loss ratio is about 2 to 1. Now, if this were a Las Vegas gambling system and that you could use, say, in playing a casino game, this would be considered to be just an outrageous advantage. I mean, Las Vegas itself, which is a highly profitable business, works on margins that are just a few percent. And what this is doing is it's offering you somewhere between 2 times to 3 times the return on every play that you make, making this what is so far, on the 120 trades that we've done so far, probably one of the best gambling systems that I've ever seen, certainly one of the best trading systems I've ever seen. And as I had mentioned, if it were a system on the S&P 500 or something, we'd probably have people waiting in line to get in to trade it. So might be worth taking a good close look at what EdgeStocks has to offer you. The service is currently free, and we continue doing substantial research and expect the program to get nothing but better from here. So anyways, I did want to share that with you, some ideas on how you could use EdgeStocks to your advantage, and how these stats are meaningful for what your risk-reward profile is. Now, of course, we'll still wait to see as the market likely turns down in the fall months of the year how the system will perform during those months, because the market has been largely bullish during these last couple of months while these trades have taken place. Our research does show us that in down markets we lose a lot less than the market will on a whole. So we'll see how that works out as we move forward. But as it stands right now, things have worked really, really well. And I like to extend to you to join us and take some benefit from this. So anyways, thank you for joining me, and I look forward to seeing you on the site real soon.